All right, good evening. Thank you for joining us. This is an interesting conversation. I'm glad we took a day to put it together. So we have enough time to sort of read about what other people are saying about the tax on cryptocurrency and then figure out what kind of a conversation we wanted to put together for you right now. Joining me is Ajeet Khurana, one of the foremost voices on cryptocurrency in India, because he's been part of that journey. Ajit's been part of the journey of crypto for a while. He's been advisor, on crypto to various people, and he's been part of the entire process so far. This is where we are at this point. There has been a tax that has been announced by the government of India. Now, this is interestingly not a capital gains tax, which is how assets are taxed in India. So, for example, if you were to buy and sell real estate, you would pay capital gains tax on the money that you made. If you were to buy and sell stocks, you would pay capital gains tax on the money that on the profit that you made. So, this has not been categorized as a capital gains tax because this currency or crypto is not being capital is not in that category. It's also not an income tax. What it is basically is a tax in a category of its own, because as soon as you make it a capital gains tax, you have to allow it expenses that can be deducted. You have to allow advance tax, indexation. None of that has been allowed. It's just a flat 30% tax on any profit that you might make on a crypto asset that we understand will also include NFTs as well. The term of holding doesn't matter. Whether you've held it short term, long term, 6 months, 1 year, none of that matters. The tax is flat. And it's not an income tax as well, because if it was an income tax, then you would have all the deductions that are available to income tax, which is also not available here. Other than this, we know the government has said that the RBI will launch a digital currency of its own. We're going to try and figure out what that means. And there will be a 1% TDS on every transaction on these crypto assets. So Ajeet is here to help us figure this out. And lots of speculation, lots of people trying to understand what is going on with this, Ajeet. First thing is, there was celebration saying, yay, this now means it's legal and it's genuine and the government is not going to ban it. Does this tax mean that cryptocurrency is now legal in India?
So, both in the case of legality and taxation, it wasn't as if crypto gains were not taxable until yesterday and they have become taxable. So, that is wrong. At the same time, now answering your question about legality, it wasn't as if it was illegal to begin with, right? As in, this was an operation, business transaction, everybody was doing in the open. But when we are talking about legality here, most people are interpreting that as regulation, which would actually enable it, clarify things. If I view legality as that the government will say it's a security, not a security, SEBI regulates it or not, this is how audit, this is how filing will be done, etc. If that is the meaning of legal, then frankly, it is the first step, no doubt about it. There is no doubt about it that it has now altered the Income Tax Act. It has now tax computation methods given. And if this can be done to a variety of other acts going forward, such as FEMA, at SEBI Act, maybe RBI Act, etc., maybe certain sections can be added or tweaked to include certain words. That is exactly what regulation is. And this is how the largest nations of the world have regulated crypto.
So then my next question will be, do you see this now as making investment into cryptocurrency unattractive? Because 30%, that's one third of the profit that you make. So this is my understanding, correct me if I'm wrong. I bought a crypto asset for 100 rupees. I managed to sell it for 200 rupees. So I've made a profit of 100 rupees. They're going to charge me tax on my profit, which is 30 rupees. So one third of the profit will be gone in tax. Is that correct? And in your opinion, does that make it unattractive?
The first part is what you have said is correct, but it is actually worse than that, because there is specific wording in the finance bill which says we are changing the word sale to transfer, which means actually this tax is on. And by the way, finance minister, even in a press conference subsequent to the budget, said, listen, it is on transfer. Now, if you had made that 100 rupee profit on a 100 rupee purchase, while you would hate to give that 30 rupees and would hope for a 10 or 15 or 20 or a capital gain like tax on that, preferably zero, of course, but you could probably clench your teeth and still pay tax because you kept the 70. What has become a little crazy is because transfer itself may or may not be a sale based transfer. In crypto, it's not easy to sell. Like if I transfer asset that I hold in a crypto exchange to some place, which the government doesn't know, they just know the address. They don't know whether this constituted a sale or a mere transfer. So they have gone overcautious and say it will be done at the time of transfer, which means transfer will be deemed sale. This is the bad part, much worse than the 30%.
Which means that even if I were to give you the asset, transfer it to you without taking any money from you, we would still attract tax. That's what you're saying.
So before I say yes to that, which by the way is the answer, this specific thing about people giving, or in this case it would be a gift because you didn't charge me, has also been addressed separately, and it has been specifically stated that gifts will be crypto gifts will be taxed at the hands of the recipient. I'm so sorry, my phone is ringing behind me. I'm sure it's disturbing you. If it doesn't go off, I'll have to step up and take it.
Yeah, I mean,
Right?
you can go take a look at your phone quickly. Let me just do a recap for the audience. So this is where
Thank
we
you.
are.
Thank you.
We have some of our audience members who've come in as well. So Ajit, just explaining to us how this taxation will work. It's going to be on the profit. It's going to be on transfer of assets, not necessarily on sale. And this is interesting because legally and from a tax point of view, sale is very specifically defined as a transaction that involves money. So that's the interesting part. That's where we are right now. He was just going to answer the question of whether or not he feels that cryptocurrency now, does this make it unattractive? Because remember, if I were to ask you now to invest in something, you would automatically sit and compare it to the other asset classes available to you. If you were to invest in equity in the stock market, you would be tax free after 1 year, which is long term capital gains tax in equities, tax free after 1 year of holding, or in a mutual fund is tax free. Whereas here in cryptocurrency, you would be paying 30% tax. Unlike, for example, if you were to compare that to say a fixed deposit, if you are in the 30% tax bracket, that is what you would pay on a fixed deposit as well. Um, if you were to put your money into long term sort of debt, which is nation building like PPF, there's no tax at all. If Ajit is back from his phone call, we're going to take that question to him on
Thank
whether
you.
or not he sees this, there he is, on whether or not he sees this as being unattractive or a dampener of some sort. Ajit, what's your recommendation to people holding right now?
So taking the example of the stock market versus FD, as opposed to easing it down as to stock market and then mutual fund and then balanced mutual fund and eventually landing to FD. If I were to take fairly high risk asset like small cap stocks and fixed deposit in State Bank of India, try to widen the gap. I think that even if the taxation on stock were to worsen from their present position, people wouldn't automatically, retail customer wouldn't automatically jump to or significantly jump to FD because the objectives of their investment are fairly different. So yes, 30% is a dampener. It is all the more so a dampener for people who would have been in lower tax slabs, at least at the personal income tax level. But I also feel that today people are entering this asset class with the expectations of a very different kind of risk and return than they do in literally any other asset class. And as a result, yes, it hurts us, but I don't see a shift being very prominent.
Do you expect, I mean, we've had some talk from government about the fact that they will regulate. Do you expect that there'll be a regulation follow up to this announcement?
This word regulation is a little strange if we compare it to global equivalents. If you were to look at countries which are typically seen as havens, financial havens, tax havens, Estonia, Malta, Bermuda, blah, blah, they have crypto specific regulation. Like Malta says Virtual Financial Assets Act, VFA Act. But if you look at the larger nations like America, Singapore, etc., they have actually read their existing regulations or legislation to include crypto. If I say that is the path that the largest economies have taken, that's what Nirmala Sitaraman did yesterday. In a very small way, she addressed only the tax angle of it, and that to the direct tax angle of it. I understand, but all of the larger nations, I'm referring to the ones who are ahead of us, have just done this at every stage, read existing regulations. So the question of whether this will lead to regulation actually can be the way I'm seeing it. This is step one of regulation itself.
So tell me something. I want to also ask you about the 1% TDS, right? So it says 1% TDS on every transaction, so every transfer. But if we go back to our previous conversation where we talked about We'll do KYC when I enter that market through the exchange. Now, once I have bought, let's say, Bitcoin of a certain value through an exchange, that is now in my name. I needn't do all my transactions on that exchange, right? I can continue, I can make that transfer, make that payment via Bitcoin to somebody else off exchange as well. And that is not traceable. And that was the whole purpose of the design of Bitcoin and the use of this particular type of technology, the blockchain technology. How will they levy a 1% tax if they're not able to trace the transaction?
So Bitcoin transactions are 100% traceable by Bitcoin address. And this is true for almost all cryptocurrencies. These Bitcoin addresses may not be attributable to individuals. That I agree. Now, this is where law enforcement, tax enforcement, etc., in the world have used this characteristic. That suppose there's a multi-hop that I buy on an exchange, I give to Faye, Faye gives to A, who gives to B, who gives to C. Now, nobody knows who A, B, and C are. But at one point of time, let us say at the point of origination, my KYC was with the exchange, which levied me the 1% TDS, right? So if somebody wanted to, and there are software methods of doing this in, especially in the AML, anti-money laundering space, they could connect these hops, right? So that is the idea, that if they are leaving enough traces in the system by doing this 1% where they can, right? Then tomorrow, for example, I buy and I take it away. Tomorrow somebody can ask me, where did you take it? Because the fact that I bought it, took it away is documented in an exchange, right? So because of this trace, this could lead to significantly enhanced compliance.
So, like you had assumed, a lot of the onus will be on the exchanges.
So broadly, what we do is we divide the entire crypto space into lit pool or dark pool. Lit pool is where you can not just attribute activity to addresses, which is digital entities, but you can also attribute them to human entities or corporate entities. So yes, you are right that I am putting a lot of the onus of this on the lit pool, which could include predominantly exchanges, but also other software providers, service providers, custody providers. Just to give you the reason I'm saying this is that India's largest, or a startup of Indian origin, the most valuable one is in crypto, is not a crypto exchange. When CoinDCX became India's first crypto unicorn, we had to all clarify that it became India's first crypto exchange unicorn. India's first crypto unicorn was actually a blockchain provider called Polygon. At that point, it was called Matic. What I'm trying to tell you is that the lit pool does include exchanges, but also other entities, and the onus of the TDS will be on the lit pool.
Okay, so we have a couple of questions that have come in from our audience that I would like to address if that's okay. Ovis K says, what if I transfer 1 lakh rupees into my WazirX account, don't buy any crypto, and then transfer the same 1 lakh to my bank account? Will I be taxed? I don't think so, right?
So there is absolutely no provision for this because it is, transfers should not. But this has come up because, frankly, the operationalization of the TDS has not been explained yet. So this is why it's leading to all sorts of wild speculation. For example, if you think of this question, as in it should actually be like, why would this attract TDS? As in, why would this attract TDS at all? And I agree with that. It is just that since the government has not specified, see how the income tax of 30% will come is obvious because we follow the system of self-assessment tax. But how the TDS will come about, they haven't specified. Hence, such questions come up. My answer is, as of what we know, no way this will be TDS. But we are waiting for more clarification.
Because technically he's transferred cash into an account and cash out of an account, but there's been no transfer of a digital asset.
That is correct. That is correct. Now, what is very interesting is that RBI issues payment wallet, or what is called digital wallet licenses, like Paytm has one, for example, right? MobiQuick has one, etc. I'm not sure that the exchanges have those licenses, right? In light of that, it could be viewed that this is not akin to a bank account transfer. I'm just being complete devil's advocate. My answer to Ovis is that no, I don't see this as being TDSable at all. But we have not been given the operational details yet.
Well, we have another question from Akash Hola who says, Binance is a P2P. How will that be taxed?
This is a very important and very scary question. Just As a tangent, if you will permit me, I would just like to throw a warning to everybody in general, unrelated to budget or tax, that P2P is peer to peer, which means your counterparty is not a large corporation or institution whose accounts are known, whose address is known, whose people are known. You are dealing with faceless people, and tomorrow, if that person ends up being a bad actor and is subject to some sort of, let us say, criminal investigation, those traces are reaching you also. Obviously, I realize you have done nothing wrong, but just be careful about peer to peer with unknown people in general. Having said that, to answer the specific question at hand, uh, this is actually a very problematic part, because while the exchanges hold your PAN card and other KYC information which they take at the time of onboarding, you as an individual, if you are now supposed to do this, it can be not just onerous, it can be impossible. Which is why I said that how this TDS works itself, the operationalizing is not yet known. At present, TDS does not distinguish, as in there is some distinction that if you are an individual not subject to audit, in general, not related to crypto, you may not have to deduct TDS and stuff. Whether crypto will also inherit all of those characteristics in the absence of clarification? Probably the answer is yes, but clarification is required.
Well, we have a couple of more questions. Jaykumar says, when will it be implemented? Jaykumar, everything that comes in the finance bill gets implemented from the 1st of April. So the question I will ask then is,
Hey,
Ajit,
Faye, Faye,
if someone holding,
I-
sorry,
hold on. I want to say something very interesting on this question, and that will tell you why this question came up. So, a lot of people who are in crypto are reading the finance bill for the first time. They never knew a document like this existed, and for the first time, they are going to have to read it, and they are noticing the date 1st April 2023 come again and again. And they do not know the difference between financial year and assessment year. So, a lot of people feel this is happening like 14 months down the line. So I just want to tell people who have read the word now, date 1st April 2023, that that is AY, which is assessment year, which means it represents the financial year starting 1st April. So Faye, you are completely right. But I'm also giving you the significance as to why people are asking this question. They're like, oh, it's 2023, etc. No, no, it's 1st April 2022.
so effectively, if someone is holding a crypto asset of some kind at this point, and they do sell between now and the 30th to 31st of March, they will not incur that tax.
So here is the interesting thing, uh, because it is not as if, let's say personal income tax. We know a certain rate is applicable up to 31st March because it was announced in the previous budget. This budget changes it, so now beginning 1st April it changes. There was no such announcement. We assumed that crypto taxation has to be done logically. That if it's for shorter term, you pay the income tax. Some people may have been paying capital gains for longer term, etc. Because there was no such word about what is to be done with that. In similar situations in the past, for example, let us say investing in startups, which led to the very notorious thing called angel tax, etc., what has happened is when the tax gets specified for the first time. So, what happens to all of your activity in the past? It is not as simple as saying that no, no, since this is specified from 1st April 2022, it won't apply till 31st March. Because what will apply till 31st March? Your assumption or my assumption? This is the killer. Most people, CAs included, at present are saying, no, 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 we are going to go with it the usual way and we'll use the tax slab method for computing short term capital gain, etc. And that seems to be the consensus. But this also is an area of worry, as we have seen in other tax legislation in areas which were introduced for the first time.
There are interesting questions coming in. Akash Hola says, I mine cryptocurrency using Binance Pool. It's not an Indian company, so how will it be taxed? There's also
So,
somebody else who says, does crypto mining make sense anymore? Is it a waste now?
So here is the thing. Mining, there is only one question around mining, which people have, which tends to be around point of incidence of taxation. So you mined and you created cryptocurrency, then you sold cryptocurrency. So 2 points. A, when you created the cryptocurrency, and B, when you sold it. So globally, the view that is being taken is that because mining was a service or an activity or a professional activity that you undertook and you got crypto, this first incidence itself is the point of incidence of taxation, because you have been financially rewarded, you have made an income, right? So
Yes, yes.
first, it is not about selling. So the first thing is that this, I think, is a reasonable assessment because you did make an income, though not in fiat. Second thing is, does it still make sense? It is just your computation. Electricity rates change, difficulty of mining changes, please add one more variable, which is the impending taxation, and then see if you're, because there are, by the way, there are mining calculators available online. They now probably have to have one more box saying what is the rate of tax. And this is, by the way, non-trivial, because a lot of people, like, even in the stock market, the people who make a lot of profit are the ones who are shouting from rooftops, whether they are individuals or mutual funds. And the people who are making losses, obviously many are, generally tend to be quieter. Even in the crypto world, that is all the more so. So maybe you have accrued losses which you can set off. So maybe mining will be profitable because your marginal rate of tax effectively won't be 30%, because you can set it off against your losses. So I don't know. You have to perform the calculations yourself.
In fact, there's one person, Nitish Kumar asks, will there be a slab system for retailers? We understand that there is no slab system at all. It doesn't matter what your otherwise your taxation, your marginal taxation rate is, 10%, 20%, 30%, you will pay 30% on this asset, right, Ajit?
That's correct. That's correct. Which is how you opened the session also, that it's now isolated. We have said that this will be treated as a separate category. You can't set off any expenditure and you can't set off any losses in non-crypto spaces.
Chavi Kashyap has a question. Does this mean if we add money on WazirX, that transfer is not liable to tax? But if we transfer any amount from WazirX, that will be liable to tax. Two, the transfer of the ownership shall be taxed.
So first is transfer money to any place. I'm assuming that money here refers to fiat, because in the crypto world people can refer to crypto also as money. So that's a little dicey. But now the second question of transferring away from WazirX. If it is transferring fiat away, I don't see any logic of taxable or TDSable. But in this context, to make sense of this question, I have to assume you are transferring token away, right? Now a view should can be taken and should be taken that if you were to transfer, and I am not generally as liberal as taking names of entities, but since you did from WazirX to CoinDCX, right, that means you transferred coin and you have the same PAN card and KYC at both places, which means it can be established that you have to transfer to yourself. Actually this should not be taxable. But since there is no such exception provided in the finance bill, and of course more details are expected, and they are saying we will tax at transfer, then the difference between the price at which it came in and the price at which and the market price at which you transfer could be seen as, just like how GST or value added tax did the same thing, right, as in a slab by slab by slab kind of addition to the value that is accrued. It could be that way. It does not make sense. So Chavi, you don't have to tell us that, because you're putting money from your left pocket to your right pocket, because both pockets are yours. So at present, that exclusion has not been mentioned. Can we assume it to be a common sense exclusion? Chartered accountants.
Most chartered accountants will tell you not to make that assumption, not to
That's
make a
correct.
common sense assumption at all. Akash also asks, forex crypto wallets, will they be taxed as well?
So this is actually the most difficult to understand part of the entire space. As far as the liability on the individual is concerned, whether you did foreign based transaction and hence feel it is not traceable, or whether you met up with a friend in a coffee shop and handed him currency notes or her currency notes and did the transaction, none of these create exemptions. So the answer is absolutely, as in there's no way the Indian government will say that, if you participate in capital flight, we will further reward you by not taxing your income. That's not going to happen. So the question, really the hidden question, and it may not be this gentleman's question, is that, is if I were to hide my transactions, maybe by doing them abroad, would I escape the tax net? So let me tell you this, that this is basically what is called the parallel economy, black money, etc. That if I hide transaction not related to crypto, can you escape tax? The answer is, the legal answer is absolutely not, right? That doesn't mean people are not trying, but I would strongly recommend against that, right? As in, and on the blockchain, please keep in mind, transaction entries are written forever. 10 years later, somebody could pull up the transaction and look at it. So is it liable to tax? Yes. Will you be able to dodge it? Don't even think like that.
We have DJ Joey who says, I'm still new to crypto. I haven't gotten on the bandwagon yet. Should I give it a complete miss now?
So let's put it this way. If you were getting onto the crypto bandwagon because you feel that you may make a profit, let's start with that assumption. Really, an imposition on profit, imposition of tax on profit, which means let's say you are going to buy for 100 and sell for 101, or buy for 100 and sell for 200, whatever it was. The fact that there is now a tax, if that now so strongly discourages you that you would not buy, then okay. But I personally feel that I would lick my wounds. As in, it's please understand, it's a tax on profit. It's not like GST where you are paying, as a retail customer you're bearing that 18% or whatever, and not getting that additional marginal 18% utility. Here you pay tax when you earn a profit. Your taxation is lowered by 30%, which is, sorry, your profit is lowered by 30%, because that's the concept of tax, income tax.
Um, I have to ask you also now about the RBI's digital currency. There have been some people who've been calling it a cryptocurrency. The government has said it will use blockchain and other technology as well. But effectively, if the RBI releases a currency, it has to be a rupee. My understanding is there cannot be an arbitrage between the digital rupee and the physical rupee. They have to be of the same value technically. So, what will this currency be used for?
So a lot of people, and this is where, for everybody who says, I can use UPI, I can use Amazon Pay, Google Pay, whatever, Paytm, etc. Why would I care? Frankly, a lot of these people are speaking from position of privilege. If you look at why, over, like when I last talked to you, the number was 82. When I'm now talking to you, the number is about 95 countries around the world are exploring the concept of, let us say, a blockchain based currency, which I think is the most accurate descriptor. People call it digital currency, but then, isn't UPI digital money? So I think I'll explain why that is such a big deal, and why a lot of people who are listening to us may not feel that it is a big deal, because it does not specifically affect them. India has about 19 crore unbanked adults. There are many reasons why these people don't have a bank account. So I don't want to make a generic statement, but one of those reasons could be that banks are not willing to open their account, or banks are not available with them to open an account, right? A lot of progress has been made in this space. RBI publishes a regular record of the penetration of bank accounts, but at the same time, there is still 19 crore adults in India who are unbanked. In number terms, we are second worst after China, but number is not fair because our population is also large. But there are several countries where the unbanked proportion as a population is worse. Why currency notes will not go away despite the demonetization, etc., is because I can just need to have the money and give it to you. I don't need to open an account, a KYC, a PAN card, Aadhaar card, none of that. I can just give you the money. A blockchain based digital rupee is a peer to peer asset that people are not understanding. I can send you 100 rupees at a click of a button. If you have a UPI account, I have a UPI account, but you have to have those accounts. But if I give you a 100 rupee note, we don't have to have any account. So the magic of crypto money or blockchain based money, such as the Indian rupee, would be that if we have an internet connection on a device, and India is uniquely positioned that the number of internet connections is more than the number of people with access to toilets, right? So that means internet penetration is very heavy. Even people who today cannot transmit money remotely or digitally will be able to do that even in the absence of bank accounts.
Effectively, do we have the infrastructure to be able to pull that off?
So it will require a wallet. Just to give you an example of what is a wallet, Paytm, especially its basic version, is a wallet, and then there are many others. So if we have that wallet system, the rest of it is your mobile device and your internet connection. So I would say, given the kind of penetration we have seen in, let us say, YouTube and OTT channels, and we get like so many people from so many places being able to do that, I think that India, and this is not true about the other 95 four countries that I'm talking about, India actually does have that infrastructure. What is required is not the physical or technical infrastructure. We have to get the legal infrastructure in place, because we have definitions of legal tender, we have the Coin Act, we have the RBI Act. All of those are going to have to be touched to make this legal.
There's a question on NFTs as well. Hard Rock says, what if I mint my NFT? Is it taxable?
This is a very interesting question. And I must say that while NFTs have been specifically mentioned in the definition of virtual digital asset yesterday, and by the way, so much has been mentioned that anything which has a digital representation is basically now a virtual digital asset, according to where India stands as of yesterday. The question of whether you mint an NFT, is that a taxable event? I must say that this is the one part which has not been covered. But hence, I have no choice but to go with common sense, right? Unlike mining, where you actually provided a service to the blockchain and there was actually a reward in the form of crypto, minting isn't that. So, minting should be akin to a restaurant preparing food but not yet selling it, or an artist preparing a painting but not yet selling it, right? So, actually, the stage of minting should not attract a taxable event. It, by the way, does not even incur a transfer because the word transfer could get triggered. It really is right there for the first time. So I must tell the questioner that this is an opinion. There is no clarification on this yet. So don't take it as God's word yet. But yeah, it does not seem like it will be a taxable event.
Jindal 2K6 says if I do a transfer of 1 lakh rupees to Wazirex and then always trade cryptocurrencies and never convert it back for 4 years into Indian rupees, how will the tax calculation work for every one of those 4 years?
I enjoy the fact that all of your questioners are exactly transferring 1 lakh rupees. As in, it's amazing. As in, that seems to be the ticket size here. Yeah, and they also, by the way, are giving the same exchange name. Which congratulations to Nishchal Sethi for setting it up. But uh, once again, because there is global precedent. For example, take the case of Portugal, which has said no tax on crypto transactions. Some other countries are actually keeping crypto to crypto transactions out of the ambit of taxation. Hence, these questions arise. Uh, in the Indian tax system, there is no such exemption to begin with. So I purchase Bitcoin with my 1 lakh rupees, which you are transferring, then swap that Bitcoin to Ethereum. Now, the fact is that right here is a tax event. I'm not saying you have made a profit, you could have made a loss. Both the Bitcoin price and the Ethereum price at that point of time, when you convert Bitcoin to Ethereum, will have to be pegged to an Indian rupee price, which will determine whether you made a profit or a loss. This, by the way, also works when you swap foreign exchange. You always peg it to your base currency, which is the Indian rupee, to determine whether a profit or a loss has been incurred. So yes, actually, that I understand why you may feel that if you don't withdraw, it may not be taxable, but the taxability is at each transaction.
All right. So, lastly, I will ask you, Ajit, for your advice for everybody who currently is holding crypto assets. What do you recommend they do? Should they be looking at their marginal tax rate? If you are in a lower tax rate, if you otherwise pay 10% or 20% taxes, might not be the best thing for you.
So I'll give two answers. The first answer is because we are talking of investing in crypto, let us talk about some warnings associated with that and then the specific one. I would tell everybody, listen, there seems to be some sort of a gold rush. A lot of people seem to have made a lot of money very soon. And some of them, if you will see behind Faye is a dog, have actually made profits on coins which have names similar to dog, and they have pictures of dog on it, and it seems like the world has become so easy, as in getting rich is merely a matter of buying a fancy or strange sounding coin. It is not the case. People have made lots of losses, they don't talk as much, and secondarily they will make lots of losses, as a lot of these promises don't turn out to be. So please keep that warning in mind. Anything which is a get rich quick scheme is necessarily also a get poor quick scheme. So that warning has to always be given. So get in only if you understand. Now, as far as what Faye is asking, in my opinion, Faye, and please, viewers, my opinion, I don't let the incidence of taxation cause me to throw the baby out with the bathwater. I wonder if that is or cut the nose to spite the face, and lots of other English expressions which say that, to do a small activity, don't destroy a bigger activity. Kill the hen that gives the golden eggs. We have been saying this moral science in school. All I'm saying is, please factor the tax incidence into your computations. If you still find this to be an attractive deal, go for it. As in, suppose, for example, tomorrow tax rates change from 30% to 35%. What am I going to do? I'm talking about personal income tax rates. What am I going to do? Stop earning income so that I don't have to pay tax? Clearly not, right? I'll complain, I'll come to Faye and I'll talk about how bad this entire thing is, and I should be made the finance minister to bring it back to 30%. But I wouldn't say I'll not earn an income so that I don't have to pay tax. So I think that is a little far-fetched. There is pain in the system, no doubt about it. And the pain also is the harassment that could come in because of lack of clarity of procedure. But just factor in the taxation. You were anyway always liable for tax. Factor it in. If it still makes sense, invest. Doesn't, don't.
All right, Ajit, thank you so much for speaking with us. To our audience, if you have more questions, make it a point to write it in our, in the comment section, and we'll ask Ajit to come back and answer more questions for us. Of course, this is something we're going to, there's a fine print in the finance bill that people like Ajit have taken the trouble to read through, but we'll also, the government will likely have more announcements as well, and we'll be tracking all of that for you. Thank you so much for watching. Do catch the news, which will be up at 9 o'clock.